Hi there, I'm Tom Field. I'm Senior Vice President of Editorial with Information Security Media Group. My topic today is redefining banking's unique cyber risk. And it's my privilege to welcome to the virtual studio, Scott Kannry. He's the CEO of Axio. Scott, thanks so much for joining me.
Thank you, Tom. I really appreciate being here and the opportunity.
Scott, you tell me that your mission is to solve cyber risk. So my devil's advocate question for you is, where is it broken?
Well, funny enough, Tom, there was a phenomenal article right on point in the Wall Street Journal Cybersecurity edition yesterday titled Cybersecurity Experts Alarmed by Broken Cyber Market. And a couple of the points raised in the article are that lack of appropriate corporate governance lends itself to a situation where really nobody is ultimately responsible, and responsibility falls to many. The article also talks about how product hype and the way in which the cybersecurity product market just pushes new things all the time, and it lends itself to a lot of uncertainty about products and product efficacy, have created, as the article goes on to say, something akin to a lemon market where buyers can't actually distinguish between good products and bad products, somehow end up falling in the middle of the two, and over time both good and bad products are pushed out of the market. And that's really kind of where we are as far as the types of things that companies struggle with. Who's in charge, how much should we be spending, where do we spend, you name it. It was perfect.
So, Scott, we've seen huge recent fines levied against the likes of Citi, Equifax, Capital One. What do those types of penalties tell you about cyber risk?
Well, I think if you think about those organizations, right, Capital One, Citi, they're incredibly large organizations. They're in the financial world, obviously. Not that anybody has an unlimitless budget, but those two organizations spend a heck of a lot on cybersecurity, and they're also the caliber of organizations that can attract the top talent in the world. And yet, despite that, being able to spend hundreds of millions of dollars per year, hire whoever they presumably want from a cybersecurity standpoint, haven't been able to solve the problem. And as is the case in both of those instances, when something happens and people look back with 2020 hindsight on the narrative or the lack of a narrative up until the event, it's easy to poke holes and look at things and say, this company didn't know what it was doing, and therefore the fines come down like they have, and presumably will continue to.
Scott, let's talk about banking, which of course can include institutions of all sizes, not just the cities and the Capital Ones. How would you describe the state of cyber risk in the banking sector today?
Sure. Well, I think, relative to other industries, there at least is the benefit. And again, despite what we've just seen over the past couple, weeks and months with these two incidents, the banking industry does have the benefit of being, or the financial industry more, broadly speaking, does have the benefit of being one of the few that is very heavily regulated from a cybersecurity standpoint. So clearly, versus a lot of other industries where you don't have the regulation, you don't have the budget attention, you don't at least have some semblance of board focus and whatnot. You don't you don't have the pure spend that they do. So on a relative basis, there is some benefit to that. But, and I think this article also mentioned it, one of the challenges in a heavily regulated industry like financial services and banking is that for obvious reasons, because people don't want to pay fines, they will play by the regulations and comply with the regulations for fear of not wanting to get fined. But oftentimes they'll miss where the risk really lies, and they're not entirely focused on what matters to the enterprise, what's the business impact of events. They're more concerned with checking the boxes and making sure that they can't get dinged on something that's known, versus spending an appropriate amount of time on what's unknown and potentially like I said, where larger amounts of risk might actually lie. So it ends up being a mixed bag. You haven't had aside from the couple, I mean, it's been an industry that's probably done okay, but long way to go.
So that's the state of cyber risk today. How would you like to describe it ideally?
One of the analogies that I often use, that our company often uses, is something akin to keeping the books, financial management and reporting. And if you think about that discipline and everything that rolls up to a CFO and the instruments or the the methodologies and really the artifacts that lend itself to modern accounting, modern financial management and reporting. You've got a balance sheet, you've got an income statement, statement of cash flows. It's a tried and true common language on how companies ought to understand the strength of or lack thereof of their financial position. That starts from the board down to the C-suite, down to all of the various practitioners within the organization, because a company's financial strength is not just a function of how good its CFO or its bookkeeper is, but everything on an integrated basis. And I think if you use that type of analogy or that type of a structure and think about what cybersecurity needs a common approach. It needs an integrated methodology. It needs something that can speak to the board in a language that they can understand, that can translate down to the C-suite, that can translate even further down to all of the practitioners at the ground level. And it's not just the CSO or CISO or you name it. It's the risk manager who buys insurance. It's the legal team who manages contracts with clients and suppliers. It's human resources when it comes to employee training and awareness. It's supply chain. And at that ground truth level, you've got uniquely different things, typically handled by uniquely different folks with different technical abilities who report up to different folks and different budgets and so forth. And if that ground truth is broken, or that ground truth perspective is broken and can't be integrated, well, then how can everything roll up to a CFO who's got to make integrated budget decisions? How can something like that then roll up to a board who needs to look down and just say, hey, we understand what our risk is, we're doing the right things, and if something happens, we're going to be okay. That's not the case with cybersecurity. That is the case with other tried and true practice disciplines like financial management and many others.
Big question. What's the path to get there?
Well, the path is one that that we're proud of trying to forge. It's an evolution on how companies think about cybersecurity. Our view is that while it's certainly important to understand the threat and vulnerability universe and technological failings, and yes, everything I started the call with as far as what that product set is, it's always being developed and churned out. That alone can't be the decision set on what to do. And oftentimes when we talk to clients and subscribers to Axio, there's often a well, we don't need to talk to you this year. We've got our prioritized list of vulnerabilities from a consulting shop, so we're working through that, and let's talk next year. And oftentimes I'll say, okay, well, tell me how that prioritized list of things to fix was actually construed. And there's a little head scratching. And then if people get to it, they'll say, well, sure, threats and vulnerabilities and what's hot and what's not. And I'll say, okay, well, great, because you still need to do that. But might it be such that the ninth thing on a list of 12 is actually the one that you need to pay attention to? Because if that vulnerability or deficiency is exploited, that's what's going to create the biggest impact and challenge for your business. And that's when people will start to see that there's a better way. What it ultimately points to is understanding the business side of cybersecurity risk. If something does happen to you, what might it look like based on who you are, how you use technology, et cetera? And what might the business impact of a cyber or digital risk event materialize look like? Are we going to be out of operations for any length of time? Are we going to have money stolen from us? Is there going to be some type of infrastructure damage? And beyond that, what might all that cost in terms of impact? And by going through what's a pretty simple kind of business-centric structured process, it totally changes the narrative from technical complexity and a lot of things that people's eyes start to gloss over on to something akin to here are the 5 major types of cybersecurity events that we might face as a business. Here's the rank order of what those impacts might be. And subsequently, by understanding that, now focus can be put in the right direction as far as what do we need to protect against, try to prevent, be prepared to recover from, and then subsequently kind of layer in everything else. Do we have the right tech in place to protect against those things? Are people aware that those things can happen? If we do have that event, despite our best efforts, do we have an insurance portfolio that's going to provide sufficient recovery so at the end of the day, we'll be okay? And really, as simple as it is, it's an incredible challenge for companies to actually change that thinking, put somebody in charge, drive the governance down, and solve cybersecurity like we started with.
Scott, talk to me about Axio. How are you helping banks to make this journey, and what's unique about your approach?
Sure. Well, I've already hinted at plenty about what we do. The quick story on Axio is that me being an insurance veteran, found a partner in business with my co-founder Dave White, who had spent 20 some odd years at the Software Engineering Institute at Carnegie Mellon, authoring what were basically risk management methodologies that then became cybersecurity methodologies that really are kind of a CISO's playbook of sorts. And there's a lot of that work that's very active and vibrant in industry today. The company started on the notion of a CFO who maybe has their last cybersecurity budget dollar to spend this year, having to decide between what I did in my former career, meaning sell cyber insurance, piece of paper that provides financial recovery, or something that one of Dave's methodologies may have pointed to as a technology to meet a purpose within a maturity framework. How can those folks make that decision between, like I said, a piece of paper that will pay the bill versus a piece of tech that prevents the thing from happening so you don't have to pay the bill? And we thought that the world needed some type of an agnostic, independent solution to help companies navigate those challenges. We built it. Our methodology has all sorts of various viewpoints centered on quantifying what the business impact of risk is to an organization, similar to what I just talked about, and in a way that's dynamic, that's repeatable, that allows benchmarking against peers, insight into industry best practice, that at the end of the day is very much intended to solve the problem that we've just discussed. It speaks to that ground truth practitioner level, provides CFOs insight into budget decisions and allocations, helps the board meet their emerging duty of care for cybersecurity. And at the end of the day, we've built this solution software methodology that very much is intended to be the cybersecurity equivalent of keeping the books.
Excellent. Scott, I appreciate your time and insight today. Thanks so much.
Very good. Thanks, Tom. I appreciate the opportunity.
Again, the topic has been redefining banking's unique cyber risk. You've just heard from Scott Kannry. He's the CEO with Axio. For Information Security Media Group, I'm Tom Field. Thanks so much for watching us today.